You think you own your house. You don't. You're renting it from the government, and the lease never expires. Every year, the state sends you a bill for the crime of occupying land you already bought. Miss the payment, and men with badges will remove you by force. This isn't taxation. It's extortion with a deed attached. Property tax is the last feudal tribute hiding inside a modern contract, and it guarantees one thing. You will never escape the system that claims to protect your rights while selling them back to you annually. By the end of this video, you'll see the 5-stage trap, recognize exactly where you are inside it, and understand why the American dream was always a rental agreement in disguise. Here's what they don't tell you at closing. The moment you sign that mortgage, you enter a parallel debt system that never appears on your loan statement. Your property tax isn't a fee for services. It's a subscription model for something you allegedly own. The average American homeowner pays between $8,000 and $15,000 per year in property taxes depending on location. Over a 30-year mortgage, that's $250,000 minimum. You could buy a second house with that money, but you won't because you're too busy paying rent to the county assessor. The illusion is that you're building equity. The reality is you are funding a system that can legally seize your home the moment you stop feeding it. This is not accidental. This is structural. Let's go back 100 years to understand the blueprint. In the early 1900s, rural land ownership in America meant genuine independence. Farmers owned their soil outright. No annual tribute, no assessment board. Then came the push for modernization. Roads needed paving, schools needed funding. Infrastructure became the Trojan horse. Property tax was sold as a civic duty, a small price for progress. But here's the lever they pulled. They tied your ownership to compliance. The message was clear. If you want to be part of the modern economy, you pay the toll. If you don't, you're a holdout, a relic, someone who doesn't deserve protection. The psychological shift was immediate. Ownership became conditional. The farmer who once answered to no one now answered to the county treasurer. The land didn't change. The title didn't change. But the relationship between man and soil was severed. You were no longer sovereign. You were a tenant with paperwork. 50 years later, the same mechanism appeared in post-war suburbia. Millions of returning soldiers bought homes with government-backed mortgages. The deal was simple. Work hard, pay your loan, own your slice of America. But the property tax was already embedded in the contract. It wasn't debated. It wasn't optional. It was presented as the natural cost of civilization. The veterans didn't question it because they were conditioned to trust authority. They had just fought a war for freedom. Surely their government wouldn't trap them in a system that mimics the very feudalism their ancestors fled. But that's exactly what happened. The suburban homeowner became the most compliant taxpayer in history. Why? Because the debt was split. The mortgage company took half your income. The tax assessor took the rest. You never saw the full cost because it was divided into monthly payments. The trap was hidden inside convenience. Now let's trace this back one more step to the British land tax system of the 1800s. In England, property taxes were used to fund wars and maintain the aristocracy. If you couldn't pay, your land was seized and auctioned. The logic was brutal but transparent. The crown owned everything. You were granted the privilege of use. America was supposed to break this cycle. The founding generation despised taxation without representation. They fought a revolution over it. Yet within a century, the same extraction model was rebuilt under a different name. Instead of the king, you pay the county. Instead of the aristocracy, you fund the bureaucracy. The mechanism didn't disappear. It was democratized. The illusion of ownership replaced the honesty of serfdom. At least the peasant knew he was a peasant. The modern homeowner believes he's free. This brings us to stage one, the purchase illusion. You save for years. You scrape together a down payment. You sign a mortgage that will take 3 decades to repay. On closing day, you receive a deed. The document says you own the property. But read the fine print. Your ownership is subject to tax liens. Miss one payment and the county moves ahead of your mortgage lender in the foreclosure line. You think you're buying freedom. You're actually buying a ticket into a system that never stops billing you. The psychological effect is immediate. You feel pride. You feel security. You feel like you've made it. That emotion is the bait. The moment you believe you own something, you'll defend it. You'll pay anything to keep it. The system knows this. The first stage is about locking in your emotional investment so the financial extraction can begin. Stage 2. The assessment trap. Every few years, the county reassesses your property value. If the market goes up, your taxes go up. If the market goes down, your taxes stay the same or drop slightly but never proportionally. This is a one-way ratchet. The assessor's job isn't to reflect reality. It's to maximize revenue. In cities like San Francisco and Austin, property values have tripled in the last 15 years. Tax bills have followed. Homeowners who bought in 2010 are now paying triple what they expected. They can't sell because the market is overheated. They can't refinance because rates have climbed. They're trapped between an asset they can't liquidate and a tax bill that grows faster than their income. The system doesn't care if you're house rich and cash poor. It just wants the check. The assessment trap ensures that your cost of ownership rises with inflation, but your ability to pay does not. Stage 3. The service mirage. Property taxes are sold as the price of local services. Schools, police, fire departments, road maintenance. Sounds reasonable until you run the numbers. The average property tax bill is $10,000 per year. Multiply that by the number of homes in your district. The revenue is staggering, yet schools are underfunded, roads are crumbling. Police response times are longer than ever. Where does the money go? Administration, pensions, debt service. The bureaucracy that collects the tax consumes most of the tax. You're not paying for services. You're paying for the system that extracts the payment. This is where the promise turns into a leash. You were told that taxes buy safety and infrastructure. In reality, they buy compliance. The more you pay, the more invested you become in believing the system works. To admit otherwise would mean admitting you've been funding a scam for decades. Stage 4. The escalation spiral. Property taxes don't just rise with inflation. They rise with political spending. Every new bond measure, every school levy, every infrastructure proposal increases your bill. But here's the trick. You don't vote on the tax rate directly. You vote on the project. The cost is buried in the fine print. By the time you realize your annual tax jumped by $2,000, the bond is already issued. The debt is locked in for 20 or 30 years. You're on the hook whether you approved it or not. This is taxation through misdirection. The voter thinks they're supporting education or public safety. They don't realize they're signing up for a multi-decade rent increase on property they supposedly own. The escalation spiral ensures that your tax burden grows faster than your ability to plan for it. You can budget for a fixed mortgage. You cannot budget for a variable tax that doubles every decade. Stage 5. The foreclosure endgame. This is where the system reveals its true nature. If you miss property tax payments, the county doesn't negotiate. It doesn't offer payment plans. It files a lien. In most states, that lien comes with interest rates between 10 and 18%, far higher than any credit card. If you don't pay within a set period, usually 1 to 3 years, your home goes to auction. Not a bank auction, a tax auction. The county sells your property to the highest bidder to recover the debt. You lose everything. Your equity, your investment, decades of payments, gone. The buyer gets your house for pennies on the dollar. This isn't a rare edge case. Thousands of homes are seized every year for unpaid property taxes. In Detroit alone, over 100,000 properties were forfeited between 2015 and 2020. Most of those owners weren't delinquent on their mortgages, they just couldn't keep up with the tax bill. The foreclosure endgame proves that you never owned your home. You were leasing it from the state, and the lease has a termination clause. Let's be clear about the math. Assume you buy a $300,000 home with a 30-year mortgage at 5% interest. Your total mortgage payments over 30 years will be approximately $575,000. Now add property taxes at $10,000 per year. That's another $300,000. You're paying $875,000 for a $300,000 asset. Nearly triple the purchase price. But it gets worse. After 30 years, your mortgage is paid off. The tax bill remains forever. If you live in that house for 40 years, you'll pay another 100,000 in taxes. 50 years, another 200,000. The system is designed so that you never stop paying. Your children will inherit the house and they'll inherit the tax bill. The only way to escape is to sell. And when you do, the next buyer enters the same trap. This is not a conspiracy. This is a business model. The government has turned home ownership into a subscription service, and you're the product. Now ask yourself, where are you in this cycle? If you're in stage 1, you just bought a house and you're celebrating equity. You haven't felt the assessment increase yet. If you're in stage 2, your tax bill just jumped and you're wondering why. If you're in stage 3, you're paying more every year but seeing fewer services. If you're in stage 4, you're buried in bond debt you never directly voted for. If you're in stage 5, you're facing foreclosure despite making every mortgage payment. Most homeowners are somewhere between stage 2 and stage 4. They can feel the pressure building, but they don't have a name for it. They think it's personal failure. They think they should have budgeted better. They don't realize they're inside a system designed to extract maximum revenue while offering minimum protection. Here's what makes this trap so effective. It fragments the pain. Your mortgage payment goes to a bank. Your property tax goes to the county. Your insurance goes to a third party. Your HOA fee goes somewhere else. Each bill feels manageable in isolation, but add them together and you're paying double the list price for shelter. The system survives because the costs are distributed. You never see the full weight of the burden at once. You just feel a slow, constant drain. This is the same strategy used by subscription services. Charge a little bit every month and people won't cancel. Charge a lot up front and they'll revolt. Property tax is the original subscription trap. It predates Netflix, Spotify, and every SaaS company by a century. The difference is you can cancel Netflix. You cannot cancel your tax bill. There's a reason the system is structured this way. If property taxes were collected as a lump sum at purchase, no one would buy a home. Imagine walking into closing and being told, pay 300,000 for the house, plus another 300,000 for lifetime taxes up front. The market would collapse overnight. So the cost is hidden in monthly escrow payments. You think you're paying $1,200 a month for your mortgage? You're actually paying $1,200 plus $800 for taxes, but the bills are merged. By the time you notice, you're already locked in. This is the illusion designed to feel like progress. Every payment feels like ownership. Every year feels like equity. But the math never changes. You're renting your property from the government, and the rent goes up every year without negotiation. Let's zoom out and see the larger pattern. Property tax exists because the state needs guaranteed revenue. Income tax can be evaded or reduced through deductions. Sales tax fluctuates with the economy. But property tax is fixed to an asset you cannot hide. Your house doesn't move. The assessor knows exactly where it is. This makes property tax the most reliable extraction tool in the government's arsenal. It's also the most coercive. If you don't pay income tax, the IRS will garnish your wages. Painful, but you can survive. If you don't pay property tax, you lose your home. The penalty is total. This asymmetry creates a unique compliance pressure. Homeowners will sacrifice everything else to keep the house. They'll drain savings, skip retirement contributions, take second jobs, all to avoid foreclosure. The system knows this. It's counting on it. Now here's the survival payoff. 3 rules you can apply immediately. Rule 1. Calculate your total cost of ownership before you buy. Take the purchase price, add 30 years of estimated taxes, add maintenance, add insurance. If that number is more than double the asking price, you're not buying an asset. You're buying a liability. Rule 2. Never assume your tax bill is fixed. Check your county's assessment schedule. Research upcoming bond measures. Build a buffer into your budget for tax increases. If you're budgeting to the penny, you're already in danger. Rule 3. Consider tax lien states versus non-lien states. Some states allow longer redemption periods before foreclosure. Some cap assessment increases. If you have mobility, location matters. Do not buy property in a high tax state if you plan to retire there. You'll be on a fixed income with a variable tax bill. That's financial suicide. But here's the deeper truth. The survival payoff only delays the inevitable. As long as property tax exists, you are not a landowner. You're a rent-paying tenant with a government landlord. The only permanent escape is to reject the premise. That means either buying land in a jurisdiction with no property tax, which narrows your options to a handful of states with other trade-offs, or accepting that homeownership in America is a managed illusion. The third option is political. If enough people understood this mechanism, property tax could be abolished or restructured. But that requires mass awareness, and mass awareness threatens the revenue model. So the system will fight to keep this topic boring, complex, and hidden behind civic responsibility rhetoric. Here's the final warning. The property tax trap is accelerating. As cities face budget shortfalls from pension crises and declining federal funding, they will lean harder on property taxes. Assessment cycles will shorten, rates will climb, foreclosure timelines will tighten. If you think your tax bill is high now, wait 10 years. The homeowners entering stage 5 today are the warning signal. They're not outliers. They're the future for anyone who doesn't see the pattern. The system has no intention of stopping. It will extract until the asset is worthless or until the homeowner breaks, whichever comes first. If this opened your eyes to the cage you are living in, subscribe. Because in the next video, we dismantle the rest of the illusion.